Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome back to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Maury from Quorum Information Technologies to give us an update. Quorum trades on the TSX Venture Exchange under the symbol QIS, and it also trades on the OTC under QIFTF. The company is currently trading at about 70 cents with roughly 73 million shares outstanding, or about a $51 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks a lot, Trevor. Great to have Maury back. Quorum, we've heard the story a couple times, so we're always thankful when we get an update. Maury, thanks for joining us today. And I know you've got a couple of slides here you're going to show us. As we sort of jump into the story here, just remind everybody what Quorum's all about.
Maybe what I'll do is I'll jump right into the slides and I'll talk to one of the slides that gives a good overview of Quorum. And so if you bear with me momentarily here, hopefully you can see that okay.
We can, yeah, perfect.
That's coming off our investor presentation. And so there's our forward-looking information disclaimer that I need to put in front of everybody briefly. And I'm going to then move forward and really talk to this particular slide because I can use it to tell our story. And as you mentioned, right, a lot of the viewers have heard me talk about the story before, so I'm going to keep the story pretty tight here and give people a good understanding of where we are today. So we provide our software through to vehicle dealerships, primarily franchised dealerships. So we deal, of course, with those particular customers. They're our primary end customer, but we also deal with the manufacturers, the OEMs, like the Fords of the world, the Toyotas, the GMs of the world out there as well, and they rely on a number of our solutions too. In addition, we bridge the gap between the franchise store and those back end OEMs, and so a lot of our software has pretty tight integration between the two. What we have done over a period of time is, when we started the business years ago, we started as a dealership management system provider. Think of us as an ERP for a car dealership. And so that was our starting product, our initial product. As we were sort of building that particular product out, what was always happening to us is we were getting into dealerships and they were wanting us to integrate to all kinds of different third-party companies. And what we ended up learning was that there really are 25 different categories of third-party companies that dealerships use to run their business. So CRM, service lane tools, website providers, lead providers, electronic parts catalogs, all of these different categories of providers. And what we were doing is, as we were installing our dealership management system, we were constantly integrating to these different providers. But the integration that we were building was rudimentary, a lot of times one way, because that was all that was available. And so we didn't view that as, first off, it was a lot of work, but we also didn't view it as a lot of value add to the dealership. And we thought, realistically, over time, we could do a better job than a number of these third-party providers, especially given their solutions were loosely integrated with us. So we started down a path of starting to build some of these different third-party provider products. The first one we built was a sales CRM solution, and then we went on to build call it a unified communication tool that emailed and texted the customer when the vehicle was ready in the service department. And then we built a really neat service lane solution that helped them out with their whole service quoting process, and that was driving a lot of revenue into the dealership and helping the dealership really with their top line. At that point in time, we realized that we could be a lot more than a DMS company. And in fact, our relationship with the dealerships could change in that if we were helping them drive revenue in as well as being their core ERP system, all of a sudden we had a lot more of a value add relationship. So we got pretty excited about that particular strategic path. And our next step for us was, rather than build more solutions out, we started to have really deep partnerships with a few distinct providers. And in doing that, we built really tight integration between those providers and our solution. But that strategy quickly morphed into an acquisition strategy, because we became so reliant on these providers, and our dealerships really liked their solutions, that we realized that we were driving a lot of their growth, and we didn't want someone else acquiring them, just due to competitive reasons. So we felt it was best to start down an acquisition strategy, and we completed our first acquisition about a little over 5 years ago, and we've completed 4 acquisitions since, or including that one, so 4 in the last 5 years. And now what we have for dealerships is 12 essential software solutions in those 25 categories that I talked about before. And what we also have is we now have 1,433 dealership customers, with most of those being in the Canadian marketplace, but with some of them being in the US marketplace. And so it's been an interesting growth path, especially the last 5 years, where when we went through the acquisition strategy and started acquiring these companies, of course, we not only needed to acquire them, but then we also needed to go through the process of integrating them all into one company. And we underwent what we call the one Quorum strategy to really move away from that divisional model of 4 different companies, 5 in total, when you consider the 4 acquisitions, to one Quorum company where everything was organized functionally as opposed to divisionally. And what that allowed us to do is drive in a lot of efficiencies into our organization, but it also allowed us for the next acquisition to be able to onboard the next acquisition, and the one after that, and the one after that, in a lot more seamless fashion, because we were one formalized. Just a few metrics for everybody out there. I know, as you can see on screen, are different metrics, but let me just quickly talk through them and explain them a bit. Cash revenue is self-explanatory, 20.1 million. SaaS revenue, you can see 11. Now we're talking about annual reoccurring run rates based on March 31st, 2023. BDC revenue for us is something I need to explain to people. So what we have is we have a contact center. And what we're doing for dealerships through our BDC is we're helping them drive service appointments into their dealership. So we're dealing direct with the dealership's customers, contacting those customers, and then using our software to help book them a service appointment into the store. So our BDC really helps dealerships drive their service and parts revenue, which is a really important piece of revenue for our dealership. Pretty high margin piece of business for them. In fact, their highest margin revenue streams in their organization. And in our contact center, that'll work in the automotive industry. A contact center is called a BDC, or a business development center. What you can see next is our adjusted EBITDA numbers. So 1.3 million that was our Q1 number. 1.6 million is was our Q1 EBITDA, not including NADA. So every year we have an auto show. It costs us about $300,000 to go to. It's a once a year event. It's the biggest show of the year. And so we went to that in Q1. So we just showed them pre and post NADA costs. And then you can see 13% EBITDA margin, 60% without NADA. Once again, the reason we show the comparative is that we have, as an organization, really been working on improving our EBITDA margins. And if you look back at our historic financial statements, you'll see that back in Q1 and Q2 of last year, we were running in around the sort of 12% EBITDA margins, and then we improved upon that in Q3, Q4. We got to 17, 16% EBITDA margins. We were 16% without any DA in Q1. And so we spent a lot of time and effort in the organization really trying to improve our margins on the EBITDA side of things. One of the focuses for us and one of the key strategic elements for us has been profitable growth as an organization, and really making sure that, yes, we're growing as a company, but we're also always working to improve our EBITDA margins. All right, I'm going to slide forward from that slide and just pull up this one, which is a summary of some of our acquisitions. So as you can see, Autovance, we started that acquisition in 2017. It was an incredibly strategic acquisition for us, and it added to those 12 different products that we have across the different categories. When we bought Autovance, actually they had one product called Autovance Desk, and they since we've acquired them, they built out Autovance Menu and Autovance My Deal, which is a digital retailing tool for dealerships to allow dealerships customers to buy a vehicle online. Our second acquisition was DealerMine. It was a fairly large acquisition. That's where we got the BEC from at the time we did that acquisition. They have a great service CRM solution. We've since built out their sales CRM solution, and we're getting ready to launch that in the marketplace. And it will become over time our one sales CRM solution across our organization. Advantage was an acquisition we did early in 2019. That was a competitor of ours. There was a competitor in the DMS space. So we moved their franchise stores over onto our platform, and then have subsequently divested of that particular acquisition. And then, as you can see on the far right-hand side, we had the Accessible Accessories acquisition in April of 2022, which was another really interesting acquisition for us because they had a accessory sales tool that allowed consumers to look up different accessories for their vehicle online, and we've since integrated that tool into our digital retailing tool. So now when you're buying a car, you can actually accessorize it at the same time. We've also integrated that into our desking tool, so that when you're buying a car actually in the dealership, they can help you accessorize it at the same time. In addition to those acquisitions, we also earlier this week announced another acquisition, which was VIN Automotive Technologies. So we press released that on the 27th, so only a couple of days ago. VIN Automotive have a consumer portal, so it's an automotive marketplace for consumers. Think Auto Trader. In terms of a comparative type product out in the marketplace. Although Auto Trader has incredible number of buyers and vehicles on their site, VIN have built out the technology to be able to be a platform like Auto Trader. They just don't have the same vibrant marketplace operating. We're pretty excited about the VIN acquisition. We think it fits really well with our digital retailing strategy, our My Deal digital retailing strategy, in that within the automotive marketplace, what we're able to do with My Deal and digital retailing is really take that marketplace from an area where consumers might go to find a vehicle to an area where people can go and actually buy a vehicle. And we can then, of course, turn it into a digital automotive marketplace for our customers. So we're pretty excited about that. We're also keen on the idea that there's some exciting pieces to the automotive marketplace is one really exciting thing. Another fantastic thing about them as well is they have this, I'm going to call it a concierge service, which helps car buyers through the process and helps them work their way through the funnel to land on the right vehicle. So there's so many new car buyers in the marketplace today, or people that just want help navigating through buying a vehicle. And so our concierge service is there to help people through that particular process. The result of that is that we land consumers on the right vehicle, but then when they're ready to transact and connect them through with the dealership, there's a high close rate of those consumers for that particular dealership. So from a dealer's perspective, they look at it as they're getting highly qualified leads. From a consumer's perspective, they're having a great consumer experience and feeling comfortable they're landing on the right vehicle. And then we connect the two at the end of the process. What VIN doesn't have to do is they're not integrated into anybody's sales CRM solutions or DMS solutions. So we're going to integrate them into our solutions, which will just further streamline the consumer buying process, but also will give us some really good metrics on how valuable those leads that are coming out of those highly qualified leads that are coming out of VIN. And then we've got a bunch of other ideas for VIN that we're taking a fair bit of time to explain, but we're excited about the acquisition. It was one of our top 2 acquisitions that we were looking for, like top 2 categories that we were looking for in the marketplace. We got it at an incredibly reasonable price of $750,000, and we also got a bunch of non-capital tax losses, 9.6 million non-capital tax losses to go with it. So it's a great addition to the Quorum family. All right, with that said, I'm going to slide us over to one more, or move us over to one more slide. And this now looks at the different acquisitions that we've completed over the last few years. It doesn't have VIN factored into it yet. We will over time factor VIN into this calculation. But what it's showing is that it's showing the number of dealerships that we've gained through the different acquisitions over time. And it's showing the cross-selling opportunity that we have across all of those different dealerships, right? Because as you're buying these different companies, those companies are the brand that they're selling is really aligned to the different dealerships. But as we're buying these different organizations, and as we're adding to our dealership count, not all of our dealerships have all of our brands. In fact, many of our dealerships only have one of our brands, because that's the one they were used to dealing with when we acquired that particular business. So the result of that is that we have, if you look at all of our brands that we have, and if you sold all our brands to all of our customers, we would have a $5 million cross-selling opportunity, upsell opportunity, compared to our $21 million SaaS revenue. So that's pretty exciting for us. And VIN, of course, will just add to that once we update the chart and factor the VIN customer base and the VIN solution in the equation. I was talking at the onset about how we're really looking at a profitable growth strategy. This is one key component to our profitable growth strategy. It takes a lot more money to acquire brand new logos. We're still out there looking to acquire new logos and add new logos to or in our case, dealerships to our customer base. But to cross-sell to the dealerships that you already have is typically a much easier sale, a much less costly sale, and oftentimes a much higher gross margin sale. And from the dealership's perspective, it makes a lot of sense because our products are so tightly integrated that as they put more and more of our products in, it really drives more efficiencies and streamlines their business processes inside the stores. All right, with that, I'll pause and open it up to questions.
Perfect. Appreciate it, Maury. And remind everybody at this point, if you've got a question you'd like me to ask Maury, use the chat function and I will ask the question for you. The acquisition you just did, so the VIN Automotive, does it come with revenue, or is it sort of what stage of commercialization is it?
Yeah, so it's pretty early stage commercialization. So it has revenue. It's not very material revenue, so we didn't really talk about it in the press release. We look at it as the organization, the VIN organization, the team that built this out spent a significant amount of time building out the technology and the tools, and we're just starting to grow revenues, but it was pretty early stage. So we're focused now on, yes, there's a little bit of a technology investment that we need to make, mostly integrating to our product suite. But the investment that we're making is really selling the product, getting their product out there, and cross-selling, of course, our products into their customer base at the same time.
Mm-hmm. Now, I mean, with this acquisition, the other ones you've done in the past, you've obviously built a healthy sort of SKU of products and services. do you feel there's still other stuff that you can bring to the table? Is there other acquisition opportunities?
Yeah, well, absolutely. Yeah, I mentioned before that there's 25 different categories of products that dealerships are using, and we're 12, now 13 with the VIN acquisition, but there are other categories out there that we have quite an interest in. And especially any categories that support our digital retailing strategy. It was interesting if you look back in the automotive marketplace at the time of COVID, digital retailing was the rage out there. Everybody was trying to put a digital retailing solution in because they couldn't have customers coming into their showrooms. In some cases, their showrooms were closed down. Digital retailing has cooled off a little bit since then, but it's still a pretty key growth area in the automotive space. And we see it as a really important area for us, not only to help dealerships out, but also manufacturers are getting more and more interested in digital retailing. So we are really trying to round our solution out so that it not only meets the needs of dealerships, but also meets the needs of OEMs.
Mm-hmm. And sort of internally, organically, I guess I don't know how to term it. Are you guys working on any new products and services, or any sort of significantly new initiatives for the business?
We're not working on any really new products. We're doing a lot of work on product refinement, and just trying to the things that we need to do to make our products more saleable in the market, support the sales movement, support the sales organization and sales momentum that we want. So that's a key piece. We also are doing a lot of work on OEM certifications. It's been an interesting, probably last 5 to 10 years, where OEMs typically certified the dealership management system, the DMS. But in the last 5 to 10 years, they've started to put more certifications in place for different products. So sales CRM certifications, digital retailing certifications, service lane certifications. And so we've been spending a lot of time with manufacturers certifying our different products across our product suite, and just making sure that that our products are always sort of front and center, not only in the dealership's mind, but also in the OEM's.
Mm-hmm. Now, obviously, times are changing, the economy is changing, lots of things are changing here. What sort of, I'd say, new challenges, or what sort of keeps you up at night right now? Apart from, I guess, the standard stuff that you always hear about, staffing and whatnot. What sort of keeps you up at night?
Yeah. I mean, staffing is always one.
Mm-hmm.
I mean, it's always a challenge in the tech space. I mean, you go back, if you would ask me that question, 9 months ago, 12 months ago, staffing was a significant concern to us, especially when it came to tech staff. And not only was that a significant concern, but tech salaries were going up. Today, I think probably the biggest focus for me is, how do we get more sales momentum? How do we improve our sales growth rates as an organization? We obviously can grow quite quickly through M&A, and M&A has been responsible for a lot of our sort of really meaningful growth over the years. But we want to be stronger as an organization when it comes to organic growth, and we're really trying to make a bunch of improvements on that side, not only with our sales team, but also with what we call our account management team that have the relationship with a lot of our customers. And so we're really harmonizing those two groups and getting them to work together to improve cross-selling. It just makes a lot of sense that we become a really good, an organization that's good at cross-selling, especially as we sort of continue to acquire and continue to grow our dealership footprint, and continue to see great opportunities like what I have on screen here, where there's a $55 million cross-sell.
Mm-hmm. Mm-hmm. Gotcha. Now, you just recently added a new board member, and this gentleman comes with an interesting pedigree. Damien Leonard. What can you tell us about the addition, and anything you have to say about sort of the new makeup of the board?
Yeah, so Damien, Pine Tree and L6 Holdings were investors in Quorum, strong investors in Quorum over the last 2 years have been growing their position. And they recently acquired a number of other shares in the marketplace. I think if people are looking back at our trading history, they'll see that quite readily. So it's we view it as a fantastic fantastic bit of sentiment against related to Quorum, that they believed in us and believed in what we were doing, that they strengthened their particular position. With them owning now, I'm sure people are looking this up, 25.5% of Quorum. That made a lot of sense that we move Damien onto the board. And so that, of course, is a very recent announcement as of Tuesday. So we're talking a couple days ago as well. And yeah, we're excited to have Damien on the board, and we're going to work with him and leverage his experiences and his knowledge and to make better decisions as an organization.
Absolutely. Perfect. We always find it encouraging when somebody who's got sort of capital markets or investor experience joins the board and has a material vested interest. So congratulations on, and for those that don't know, Damien is the son of someone who's quite well known in the industry, Mark Leonard of Constellation Software. So I have to ask, is it, Constellation Software, they love to buy businesses like you have here. Is there anything more that we should be thinking about here, or is this just an interesting coincidence?
Yeah, Paul, it's an interesting coincidence. It's Pine Tree. Damien runs Pine Tree and manages that particular business, and they have a number of large positions across a number of companies out there. And Quorum's fortunate enough that we're one of those positions.
Yeah, very good, very good. We know the story fairly well, so we didn't want to. I knew we were going to come up with too many questions, but now that you've got the new division, now that you've got another couple quarters under your belt here, what do you think are the catalysts or the metrics? Well, let's say catalysts. What do you think that investors should really be paying attention to sort of show that you guys are executing on your business plan?
Yeah, so for us, I mentioned the organic growth and the growth through cross-selling. We're quite focused on that. We're also focused on expanding our EBITDA margins. Both of those are, as people know, they're both challenging things to execute across a business, but we believe we're well down paths on both of those to start seeing a move in our numbers. I might just mention something I didn't mention sort of at the onset is in the automotive space, selling into automotive dealerships has a few challenges to it these days, and has for the last probably couple of years. In that dealerships struggle with vehicle inventory and have since sort of probably the middle of COVID onward. What we're seeing now is we're starting to see vehicle inventory return for dealerships, but there's still a few headwinds that dealerships have in terms of vehicle pricing. Vehicles have gotten more expensive out there. Interest rates are obviously higher. The economy in general is softer. However, despite that, we're starting to see a return of interest by dealerships to solutions that will help them sell cars. And we were struggling with that for a long period of time. So that's starting to change. That dynamic's starting to change. And so we believe, with the work that we're doing on cross-selling, with the environment changing out there, and with dealerships having to focus again on selling vehicles as opposed to in the past really being order takers on vehicles, we're quite optimistic around being able to move the needle on organic growth over time.
Fantastic. Did we cover everything you wanted to say? Is there anything else that we missed, or do you want to leave us with a key takeaway today?
Yeah, no, I think the key takeaway for us is you look at Quorum from from a few different perspectives. The first perspective I look at is strong customer base, a track record of growing the business, whether it be through M&A or organically over time, and we're going to continue to sort of execute on that strategy. That combined with our profitable growth strategy and really a focus on improving our bottom line at the same time, make us I think an interesting stock to take a look at for all your listeners.
Mm-hmm. Fantastic. Well, great. We've been speaking with Maury Marks, CEO of Quorum Information Technology, symbol QIS on the Venture Exchange. Maury, always great to catch up. Appreciate the time today, and look forward to catching up in the near future.
Excellent. Thanks so much, Paul.
Thank you.